My name is Carl Williamson. I'm speaking to you from our London offices. It's June 2023. I'm the manager of the Nexus Global Solutions Portfolio and the Nexus Global Dynamic Portfolio. The Nexus Global Solutions Portfolio was down around 1.4% in May, while the Nexus Global Dynamic Portfolio was unchanged. This took the respective year-to-date returns to up 1% for Global Solutions and up 3.8% for Global Dynamic. In May, markets were dominated by concerns over the US debt ceiling and a mixed picture for the global economy. Despite the drama, US equities were relatively resilient during the month, while fixed interest returns were negative. It is a similar picture year to date, with most developed equity markets in positive territory, while fixed interest returns have been negative. A deal to lift the US debt ceiling has now passed through the House of Representatives and the Senate. This was finalised after the end of the month, and June has got off to a better start. At the time of speaking, the Nexus Global Solutions Portfolio is up over 1% and the Nexus Global Dynamic Portfolio is up over 2%. There has been an increasing divergence between the services and manufacturing sectors within the economy. The US Services Flash PMI, or Purchasing Managers Index, came in at 55.1 in the US, a 13-month high. Similarly, in the Eurozone and the UK, the number is above 50, indicating expansion. This has been supported by a robust labour market. Unemployment in the UK, the Eurozone and the US remains close to historic lows. In contrast, the situation in the manufacturing sector isn't as healthy. The Eurozone manufacturing PMI came in at 44.6. Similarly, in the UK and the US, the number is below 50, indicating contraction. US inflation temporarily rebounded in April, with both the headline and core CPI up 0.4% over the month. This took the year-on-year numbers to 5% and 5.5%, still significantly below where they were last summer. In the UK, the April inflation report was less well received. Inflation fell from 10.1% to 8.7%, however this was above expectations, which were around 8.2%. Perhaps more concerning was the increase in core inflation, which went from 6.2% to 6.8%. This meant that gilts underperformed during the month. In addition, the UK equity market was hit by lower commodity prices. Equity leadership in the US has been fairly narrow, with a handful of US technology names leading the gains. Technology stocks have been supported by a strong earnings season and growing anticipation about the benefit of artificial intelligence, or AI. Overall, growth stocks outperformed value stocks by around 7% during the month. The hype around AI supported a number of our chip stocks during the month, with AMD, TSMC and ASML up strongly during the month. During the month we made a new investment in Salesforce, a provider of software as a service. We see this as a beneficiary of AI, and it's pleasing to note that the investment is already in profit. A recession still looks probable, but the latest US earnings season suggests that companies are navigating this relatively well. A sign of moderating inflation in the US and the likelihood that the Fed is nearing the end of its hiking cycle is welcome news. However, until we have more substantial evidence that pricing pressures have eased, volatility is likely to remain with us. In this environment, we continue to think a focus on quality will benefit investors. It's been my pleasure to speak to you. I look forward to speaking to you next month.